Hi everyone, welcome back to What's the FinTech, your FinTech Feel Good show. What the FinTech is a news and information platform covering the latest FinTech development in Hong Kong, Singapore, China, and Asia. Join us every week for an engaging conversation with various tech figures to discuss about entrepreneurships, emerging technologies, customer engagements, and partnerships. Before starting this interview, feel free to share your question in the comment sections, like and share. And today we have Florian from Evident. How are you, Florian?
I'm very good.
Very
It's
happy to see you. Long time no see.
exactly. I was about to say it's sunny outside, blue sky, perfect temperatures, and we get to catch up. Aren't we lucky? So good
And
to be
you
here.
are one of the first figures of the fintech industry here in Hong Kong. You are here since the beginning. I remember meeting you on 2016 on different accelerators. So it's really great to see you back here.
Yeah, we go way back. I wouldn't say early figures, but certainly I was fortunate to be part of that first wave of fintech, if you want. Going back all the way to the FinTech Association, good memories.
Yeah, definitely. So maybe we start this interview. What we can do is asking you to introduce yourself, share a bit about your background, and
Sure.
what you are doing right now.
Sounds good. So maybe starting really at the beginning, I grew up in the Austrian mountains. I had is that better? I had a quite an adventurous childhood there. I feel fortunate about that, and I still have the scars to prove it on my forehead. Also proud about those. And um, and then I moved relatively early into finance. In terms of what I studied, that's my economics background. And then I worked at the Boston Consulting Group, also focused on financial services, and then moved into the banking world, asset management, wealth management. The last place there was Credit Suisse, where I was working on what was called digital private banking back then. We were really reinventing the client interaction with high net worth individuals off Credit Suisse. So you could think of it as corporate fintech. And it was very interesting work. And then I would say an important turning point for me was to decide to stop working on that, quit banking and the corporate world. We moved to Hong Kong together with what today is my wife and started a fintech company here. And I gave myself 3 months. My wife said, take 6 months.
Okay.
And after 2, 3 months, also probably lucky timing, 2016, where there was a lot of activity in the fintech world. I met my co-founders. We started a company called FinFabric. Never looked back. And so FinFabric, we exited in 2020. And now I run Evident, an investment platform for alternative assets.
So your previous company and this company that you have now, it's like focusing on wealth management or investment at least.
Much more with Evident now. So with Evident, so FinFabric was a lot more focused on building technology for others. Evident really is a business in the investment management space. And it's an investment platform for alternative assets with a positive impact. So if you think about it, why we actually built this company is that for many people today, you lack the access to invest into exciting alternative assets, startups, renewable energy projects, art, all the way to carbon credits. It's very hard to access. And you're missing out on an opportunity in our mind. So what we do is we make it very easy and affordable to add these type of assets, alternatives to your portfolio and benefit from that. So for investors like you, we help you to add these assets to your portfolio, get better returns, get a better diversified portfolio, and have a better connection, have more meaning in your portfolio, which is a very important part of what we do. We feel like people are looking for purpose in what they invest in. And investing into alternatives, imagine investing into a startup, gives you more of a connection to the project, to the people behind it, to the impact that it has on the world. And this is really the founding idea of Evident.
How this idea came to your mind and why did you start this kind of project?
Like many good ideas, it started with personal experience.
Okay.
So over time, I started to do more angel investing, investing in with syndicates, and the simple insight that this is a lot of fun. This gives me a lot of satisfaction, supporting other entrepreneurs, looking how they go and build great things, and providing risk capital for them to try and fail and then try again. But the whole process is much harder than it has to be, number one. And number two, because of that process and the fact that it hasn't changed for 70, 80 years, uh, it's it's kind of an exclusive thing to do, and it shouldn't be. there should be much better access to this. So the going in thought was anybody should be able to support companies that they believe in, projects that they believe in, and we have to fix the process. We have to reinvent the process, and that's how everything started. And that's how it goes. Is it's weekend work. Is you talk with some friends and they love the idea, they help you out. You work late nights, early mornings, shifts, basically. And then I would say about a year ago, we started to be all in. So we formed the core team, and yeah, there we are a year later, and it's been incredibly rewarding journey for me personally as a founder.
Perfect. That's what we love to hear when we do a podcast or listen to entrepreneurs. Quick question about your team. Is your team based here in Hong Kong? Is it like globally? Do you work like totally remotely?
Yeah, so we are a product of COVID in terms of our setup, which I look at as a very positive result of COVID, where it's much easier now to build a global team, even as a small company, and talent is everywhere. That's another realization. You just have to find it. You have to find people who believe in that idea and have follow that same mission as you do as a founder. And it's if you look at the global talent pool, you can find those people that are a perfect match for what you're looking for. So we operate across time zones more or less 24/7 now, and it's a funny thing because you see it take a life of its own. We see hubs forming. We have a growth team in Greece. It starts with relationships with maybe the first person finding another person. They find they form this local hub, and I quite like a setup like that. It makes things interesting, keeps them interesting for the team, but also you have a more global perspective. And in the end, if you want to build a viable business, that's what it takes today.
Can you share with us also the way that you structure a company from day one? The day that you say, okay, it's all in, I'm going for this project. Did you start with some co-founder? Did you go directly alone and create your business model and then find maybe a CTO, maybe a tech team, maybe a growth team?
Yeah, so I think it's really specific to the person, to the case, to the company. In this example, it was just me noodling around this idea for a while, not sure if there's something there, or if this is something that is in a way skeuomorphic. As we say, you kind of take something that's there, you try to digitalize it, but you're not really changing anything fundamentally. But with my experience in the last company, as I mentioned, in blockchain technology, I knew that we can build something that's not just a digital replica of the current process, but is truly different. But how to do that? Is it viable? Can this be a really big business? It took me a little while. So I wanted to get to that conviction first myself before growing the team. And then you have to let things play out also a little bit, right? People who just invest their time in the beginning as friends, you try to bring them on board, right? You try to show how that journey can work and can look like. And then at some point, you start really hiring people. So you put in a structure of getting good people on board. It's the key thing. And of course, I learned a lot from my mistakes. I've basically built companies since being a student and failed on a lot of dimensions. So, for example, in this case, I was bringing someone in relatively early that handled people and HR matters because of its huge importance. Looking at many people, connecting with many people, and just finding the right fit, as I said, on a global basis. And then, yeah, I think it was pretty strategic from the beginning in terms of the structure, the types of people we need, the timelines that are mapped against filling certain positions. And from early on, when I'm in, I'm in. So you plan out years ahead, and that I call it adaptive strategy. That plan will change, but at any given point in time, you need to have a plan, and that's how I approached it. Fairly structured. I did other companies before where it was very, you could say, organic how it emerged. Evident is a lot more planned.
Okay.
That's my preference, and also based on experience, it just tends to work better.
It makes sense. So can you maybe elaborate a bit more on the business model? Are you a B2B platform, a B2C platform, maybe a B2B2C? That's what we see a lot here in Hong Kong as well.
Right. So the core and also what's different for me for Evident and this venture is that we are a B2C company, but at the same time, we're a marketplace. So what our mission is actually connecting founders and investors to solve some of the hardest problems that we face. And we come at it from a capital angle, right? So people want to invest into interesting things. So for investors, we provide them the opportunity to invest into interesting projects, to connect to the people behind it, to be part of that journey. For founders, that means we help them find the right fit, the right people to support them with capital, with other things. That support goes way beyond capital in my mind, right? I think if you build a business today, you're really also forming a community. And so if you take that, you have two sides. And in a way, we're acting almost like a marketplace. And in a marketplace, you have to cater to both sides. So our B2B dimension is um, being the best support that we can be to founders, project owners, and other asset owners out there, and showing them what you can do in terms of injecting a project with capital, how that is changing today, how much better you can raise capital today. For investors, yes, of course, it's a B2C model, and um, we aim to provide an easy and affordable way, as I said, to get access to this type of assets, but at the same time, invest with meaning, invest with purpose. And we look at these, obviously, the requirements to be successful and connect to the right partners on the B2B, B2C side are different. So we look at this also separately in terms of how we manage the platform. And, just one thing here is it's this famous Uber problem where you say, well, it's a chicken and egg problem. If you don't have great assets, you will not get the investors. If you have no investors, the asset owners and startups will say, well, where are your investors? So that's one of the key challenges of any marketplace. And we were very focused on solving the problem in the early days.
Okay. How different is your company compared to your competitors? I'm sure you may have some similar solutions if it's not the same.
Yeah.
So did you focus on one angle to solve the issue? Did you choose to maybe choose another technology or maybe another way to collaborate and create ecosystems?
Yeah. So first of all, there's always competition for everything. Whenever I hear from companies that I look at and say, "Oh, we don't really have competition," I was like, "Okay, go check again." So yes, of course, we have competition. Or we're entering a market where there is already a lot on offer. But connecting back to my own story earlier that you asked, I was actually looking for solutions and say, "Okay, I just want to do this in a better way." I looked at a bunch of platforms. Nothing really was convincing to me, and maybe more importantly, nothing really excited me in terms of how you invest on these platforms. And so part of Evident is I went off to build my own. And back to your question, probably an important difference is that we really started with looking at ground zero, building things from scratch. It starts with an analysis of how do the processes work, and as you alluded to, which technologies can we use to completely reinvent these processes. So if you look at existing platforms today that allow people to invest into alternatives, first of all, mostly they are focused on funds. So you're still investing into sort of a black box. And we are focused more on individual assets. You should pick what you believe in. You should pick the founders that you want to support. That direct connection is a really important differentiator. And we can do that because we build a very efficient process. So that leads me to the second point. We use blockchain technology to essentially first digitalize the asset. People may be familiar with the term tokenization. I know you are. We don't carry that ahead of us and say, oh, blockchain tokenization, the T and the B words, they don't usually come up in conversations because we just look at it as a technology, which is the right technology to solve that problem. So once an asset is tokenized, you can completely reinvent the process. And you can make it, in our case, just like a trading experience, just like trading a stock, like right here on your phone. And that was our angle. And so if you want to put a label on that, we always say we take the philosophy, the ideas, the technology of Web3, and we bring this back into this very traditional space of investing into alternatives. Because Web3, in our mind, is a lot about communities you build around people and products and projects. And this is what investing should be about as well. And then we add additional elements, for example, elements of decentralization to the platform because we can. We have the technology to do this efficiently. And the result is just a very different type of offering that is powered by our own tech stack. That's the third difference. Most platforms you see out there, they borrow heavily from providers. which is probably the right strategy for them, especially if you Web 2 approach. We built everything from scratch, from the ground up ourselves. And that was very important to me. We want to be this tech-centric, tech-driven company.
You spoke about the first milestone of your company, or first way to find your founders that you want to onboard. Do you base this on a kind of some criteria that you choose? Do you do some due diligence? How a founder can come to you and leverage on your platforms to maybe sell his idea and want to find the funding there?
Yeah. So we aspire, and our goal is to be an investment management company. So there's a lot of things that are standard in that market. Part of that is due diligence. So we have our own due diligence approach, or basically listing approach, which includes our own due diligence. In other words, we don't want to list anything that we wouldn't also invest in ourselves. So that's number one. Then there is multiple dimensions in that due diligence. One to highlight is we also look at your impact as a company with our own impact framework. So we developed that together with a partner here in Hong Kong. I'm very proud of it because it allows us to categorize what is your impact, how you change, how you're contributing, how you're changing the world for the better. And that sounds a little soft and trite, but I feel it's really important at the core of the attractiveness of the asset of the investment. And so we look for that as one of the first checks. And as a note on that, it's impact, ESG, these words have been used and abused quite a bit. And there's a lot of nonsense going on in the space. So we take a step back and we say, in the end, it has to be, does it match your purpose as an investor? We want to show you how this asset at this investment contributes positively. This may not resonate with you. Pass on the investment. Going back to single investments, pick your own, put together your own portfolio of things that you're proud of. But we approach it with a philosophy of impact it can be quite diverse. This can be something local. This can be something very small. It doesn't have to be this fundamental invention that's changing the world. I think these goals are very scary for people. Say, like, how are we going to solve these problems? For me, it's start small. Invest into that neighborhood shop that some kids run that you really like. You want them to be successful. For me, that's also impact investing, and that's how we approach it as Evident.
So those are kind of tips for changing the world or having a best place for you. It's something that you try to have has a value in your company and communicate to once your partners, to your investors, and three to your teams. Is it something that you really want to leverage on?
Yeah, definitely. Connects directly back to what I just said. It's start with yourself.
Okay.
We tend to worry so much about these big problems, and then hopefully we can all solve it together. That's an important way of looking at the world. I think we tend to forget these days about you yourself can do so much in your own environment, and these can be small things. And we tend to kind of look down on, well, but this doesn't really change things on a global scale. I disagree. There's many concepts also in economics where I come from that that clearly show there's power in these small things. For example, compounding interest. You do something small, you do it consistently every day a little bit better, and that can be every day interacting in a more friendly way, with the people around you. That will have a huge effect in the long run, right? The second thing is just scale, right? If many people do these small things, it will pay off. It's actually a huge thing. Or another one is, you can just, the butterfly effect. I do something small now, there is unexpected effects, and then it turns into something big, totally unexpectedly. So do not underestimate the positive impact you can have with small things. Start with yourself.
All the startups coming in the fintech industry and also in other industries are disrupting the industry, disrupting the stakeholders and actors there, but also sometimes some myth about the industry. Do you have like common myth that everyone think, we have only to do this way and it's not possible to do differently? And your company and your product is coming and switching the mindset or the workflow and process.
Yeah. So maybe one, not myth, but maybe misunderstanding we encounter a lot is since we use blockchain technology, we follow a Web3 approach. People are still confused a lot about what's crypto, what's blockchain, what's Web3. So we are grouped into the crypto space where we're actually a fairly traditional securities business at the core, and we just supercharged with technology. And so a lot of the discussions are first clarifying that misunderstanding, and also explaining where we come from and how we leverage a new technology, in this case blockchain, to just build a better business. But in the end, we're dealing with very traditional, well proven assets in the market. In our case, alternatives.
And previously you had that company FinFabric as well, where you were also coming and educating a lot of CEOs of company, of banks, senior managers as well. So you have already that experience. And I always remember seeing you on many events, also educating a lot of people about, digital assets, crypto, the difference of the application of blockchain. Is it something like you still see today as one of the main problems to have a communication with, for example, financial institutions or investors? Or do you think that people now are more educated and it's easier for you to explain what you are doing?
Definitely. We came a long way. When we started, we were basically laughed off of stage. It's like, what are you talking about? No one understood what we were talking about. To some extent, although it's an excuse, but to some extent, we were early in a lot of things, maybe too early. And then some of these things actually we proved to be correct in our hypotheses. We just didn't live up in delivering against these hypotheses. And that's life, that's startup life. But yes, part of what we did was trying to explain, just for us as a company, but also to add to that broader ecosystem. And I think we're in a very different place today. The space keeps moving very fast. There's something new every day, and something new to learn and explain every day. But the broader understanding about what this is about, what the opportunities are, I think, especially with institutions, is much more there. I look at our situation with Evident, tokenization. The regulators use the term STO, also here in Hong Kong. It's a very positive development, and it's I think they found the right approach in Hong Kong of looking at this, being a lot more reserved about it, careful with it, learning about this whole industry, and this understanding now to a significant degree is now there. Okay, so now we know how to regulate it. So it now moves into this, what in economics models is called institutional reconfiguration. So the rules are slightly reconfigured to accommodate this new movement, this new development, these new opportunities of managing assets, for example. And that's certainly different. If we look at the client side, I mentioned the asset owners as one of our partners. You'll be surprised how many people come to us actively and say, yes, I want to tokenize my asset. And how many people immediately know what we're talking about, or what I'm talking about when we bring up the topic. So in a way, timing feels right for us on this. Regulatorily, honestly, also where we are with the markets, it's a lot more calm. You can be more focused on just building. It's not as frenzied an environment, not as speculative. And then the market is, I think, much more ready for this type of things.
When you were just speaking about building right now and previously about product, one of the questions coming to my mind is about iteration. How do you iterate your product and your solutions? Do you have different phases? Do you do it internally? Do you collect some also feedbacks from maybe some of the early investors on your solutions? Or is it based on all the failures that you can maybe face, as you mentioned before?
Yeah, it's something that you should know, or you can read everywhere as a founder, as an entrepreneur, as an early team. But the reality is, you do all the iterations, you do the testing internally, you put it out there for the first users, they break it immediately in ways that you couldn't have thought about. They use it in weird ways. You're too deep in as a team, right, to see this thing. So testing is crucial. Testing even before releasing is crucial. And we did that, just friends and family reaching out to groups, getting the honest, brutal feedback, actually telling people, like, it has to feel like you're mean to me. Because just because you're my friend, it doesn't help me if you tell me, oh, this is great, but it will not work in the market. So honest feedback is critical. And then the ability to iterate rapidly. That is, I mean, everyone has heard about that. One thing to highlight here is that is a mindset thing. That is a mindset thing of letting go, of realizing I love this idea and discarding it, saying I was wrong on this. The way we built this is just wrong, because the user is always right. And if you cultivate that in a team, it's powerful. And so that's what we tried from the beginning: rapid iteration, letting go of our ideas, of our convictions in, and doing these mini pivots in implementation, because you have to build for the market. You have to build for people really loving your product. And to some extent, you can start with yourself and your ideas, your preferences, but you have to build it around the preferences in the market.
And about the preference of the market, what do you see coming in the next 6 months or 1 year for your company, for your project, for your solutions, or even for your relationship with your investors, partners, or for example, family offices or financial institutions?
Yeah. Well, we have a plan, and then we'll see how that plan works out. So we try to be strategic. This year for us is about maybe 3, 4 key things. The first one is getting our own securities license. So right now, when we partner, it's usually the partner bringing in their own license, or we borrow a license and do it under that umbrella. So having our own license is critical. We're in multiple jurisdictions in the middle of the process here. And it's actually interesting work because it makes your company more robust, and it makes you go out and find people who have a lot of experience with getting it right. We owe it to the investors, to everyone working with us, to have a very robust, regulated, secure setup. And just the process of getting regulated allows you to see things where you can do better in all dimensions. So that's number one. Number two is um, traction, essentially. In our case, really being really focused on the asset owners first, being a great partner for fundraising, even if we do this via private placement, even if these assets don't all show up on the platform. If you do a good job of adding value to people who are fundraising for exciting projects, we are off to a good start. And then, of course, the third part is engaging with the community of investors. Our idea is also to serve a segment that we feel like is underserved today. People who would like to invest into these kind of things, but they don't really know how. Back to the topic of access, you don't know the right people. You don't even know what's out there. Let's start there. You have no idea which startup in Nigeria is fundraising right now, but you may be excited about it. So lifting everything on a digital level, it allows you to see things. Number two, the hurdle today is you don't know the right people. You may know these companies out there, but how do you reach out to actually invest? How do you have credibility as an investor? If you know the right people, the minimum ticket is too high for most people. It's usually hundreds of thousands, sometimes millions. We're looking at some really exciting deals right now, which have $10 million minimum ticket. Few people can afford that, as if you look at the average investors. So there's these multiple layers of hurdles that just prevent people from accessing. And so conveying that we're solving this problem, that we're an exciting place to discover interesting assets, that's our job this year, just in building that community of investors. And if we achieve these three things, we'll be in a good place.
Perfect. I have a question about the community because you mentioned it many times in this interview. How do you reach out to them? Are you using like some Discord, GitHub, Slack, or do you have maybe some email loops? Do you have a specific software and any specific platforms maybe to reach out to them?
Yeah, it's a very good question. And it's still something that we're iterating because what we do is new. And so there are no cookbook recipes to figure that out. And we have to make our own recipe. So I think a lot of it is experimentation in this context. For us, we try to understand and really have a clear profile of who do we want to serve? Who is in that target group right now? That may change over time, that hopefully expands over time, but who's in there right now? So, and then you say, where that target group, the people in that target group, where are they? Where do they find valuable information? How can we reach them? How can we help them? Because really, communicating first of all is, I think, about being informative and helpful. I can tell you 10 times with 10 posts how great we are. It doesn't do anything in my mind. It doesn't do anything for me. So I assume it doesn't do anything for users. It's about being helpful first, showing the opportunities. And so in our case, we will increase our engagement on LinkedIn, for example, as one interesting channel, because that group that I mentioned earlier, tends to be professionals. They tend to have a professional profile, and LinkedIn is still somewhat, I think, underutilized for that. But then, of course, you have other platforms where maybe you have access to younger users, like Instagram, TikTok, or even more cutting edge platforms like Be Real. So we want to experiment a lot with these too, because you don't see financial services companies doing a lot there. And then, there's platforms that we just like because they have high quality, thoughtful content. And we like to think that this is close to our nature. We think a lot about problems. We have insights to share. So you think about Reddit, for example, which is slower paced, more deliberate in its communication. Yes, you have also groups saying, yeah, this answer is good, but it's really more driven by the answer is valuable. And then you have other platforms like Twitter where it's more transactional. It's more like it's faster paced. It's more fun to use maybe. So we look at this with an analytical lens, but those are probably the platforms that we're looking for. And then it's all about consistency. So we realized you have to consistently put out what you're about, who you are, how we can help to reach people, to reach many people. That's what we will. That will be our main job in the first half of this year, and then the strategy will evolve from there.
And do you switch? Do you see a switch from the way that people take information from company like yours and the alternative way to do fundings? And also, do you see a switch from those investors coming from traditional institutions coming to more solutions like yours? Do you see it already now? Is it already like um, maybe you have like some statistic about how people invest like 2 years ago compared to now, and where they are going to find new solutions like yours? Did you see something like this?
Yeah. So in terms of statistic, let's start with the market. So private markets is the type of market that we operate in for alternative assets. That's a $10 trillion market, and has been growing significantly and very consistently over the last decade. So the thing is, in private markets, um, why it has been growing is because there have been more allocation by investors into these type of alternative assets. So you have this traditional 60-40 split of investing. Equity 60%, bonds 40%. Equity, okay, mostly passive investing, put some ETFs, and then the rest goes to bonds. So that paradigm is shifting, and this shift is driven by institutions. So it's much more a 40-30-30. So the additional 30 is alternatives. You look at the institutional investors today, some of them have 20%, 30%, some of them 50% of their total portfolio in alternatives. And there's a reason for it. As I mentioned earlier, better returns, a better diversified, more robust portfolio. You look at the stats, the any PE kind of index outperformed the S&P 500, even with the very good years we had, mostly because of cheap capital, by a multitude. And so it's just an asset class everyone should have in their portfolio. So now we're at the early days of individual investors also seeing that and actually rebalancing their portfolio, reinventing. It's really, I think, a new era of having a significant portion of alternatives in your portfolio, 40-30-30. And it starts, of course, with the larger, let's say, individual or let's say small institutional investors, family offices, ultra high net worth individuals. They're active out there already, and they have that in their portfolio. And I think we see this trend of this going further down, where people, you may not have 10 million to invest, right? But you still want to participate in that space, and that connects back to our mission of allowing people to build the same portfolio as someone who has 10 million, or maybe you have 10 million, but you build a portfolio as someone with 100 million. That so supporting that ambition is really important to us, and we feel like that dynamic will continue. There is a significant market and a lot of room to growth in that market, because despite all the growth we've seen over the last 10 years, it was mostly institutional driven. We haven't even scratched the surface in the individual investor market.
Do you think there is a fierce competition between traditional financial institutions doing what you are doing and tech companies like yours right now?
No, not right now. We're tiny. So, but we're very comfortable with being a small, nimble player. It's a lot of fun. And it's also, I don't know, I feel good about this ambition and the prospect of growing into something much bigger. But these are early days. We do see that traditional, let's say, alternative asset managers, let's take KKR, they're looking, of course, at the same dynamics. They see the same things that we see, probably earlier than we saw it even, because that's their market. They've been around for a long time, legendary firm. But they are building out their own quote unquote wealth business, where they want to serve more directly that target group. And KKR tokenized the fund on, I believe it was Securitize, a healthcare fund, and so via Securitize in the US, make that healthcare fund more accessible. And if they do it, it's immediately at scale. Maybe not for them, so it's more of an experiment, but for us as a company, that's how scale looks like. And so yeah, we're early in this, and as I mentioned earlier, since we start from scratch, we can choose a very different approach than a traditional company. And so our goal in terms of strategy is to partner with these players, make their products more accessible, bring interesting aspects. In our case, also be this door into Asian investors, where you will continue to have great dynamic. You look at Southeast Asia, you look at India, we'll see China bounce back. And another reason why I'm happy to be here in Hong Kong, with all the challenges we had in the last few years, it's a great place to really serve that market. And I'm very bullish on these markets in the wealth management context.
If you remember well, at the very beginning of the fintech industry, when it was still nascent, everyone was like, "Oh yeah, fintech are here to kill banks or really to challenge like financial
Right.
institutions." You just mentioned about how can I say that partnerships with financial institutions, company like yours coming and helping them. Do you think now it's easier for you to collaborate with them and the communication is better? Do you also think it's better for them to adopt solutions like yours?
Yeah, it's a great question, and I know you were that's what you're working on from a from a banking and corporate perspective, and I've seen that from the inside too. At as I mentioned at Credit Suisse in my case, and situation changed. So if you take a step back on that question, what are the biggest hurdles? It's two things in my mind: culture and legacy technology. And both of these things are very hard to change for a corporate and take a long time to change. So it took banks a long time and they looked like they will not figure it out in the early days. So I understand why some people said, oh, you're going to completely disrupt this industry and you're done, we're the future. Honestly, because I worked in banking, I always said that's nonsense. That disruption, that's a good fuel to motivate you, but that disruption will never happen to that degree. And you look at what banks did, they really caught up. And we all know it's still not perfect. There's still a lot of issues that go back to what I mentioned: legacy systems, processes, mindsets, culture. But the improvement is there. You see what some of the banks, the traditional banks here, have been doing in terms of their digital offering in Hong Kong. Great. We have virtual banks in Hong Kong who add some more pressure to do better, and I think the results have been really good. I think there's a lot of moaning and complaining about banks, but it's all. I think it's also important to recognize progress has been made. And so from early on, but even more so now, we look at these players as partners. Now, that was the banking example. If we look at the asset management industry, nothing has changed for 70, 80 years. Nothing, like literally. The process is still the same. And the competitive platforms you mentioned earlier, we look at them as okay, it used to be the stack of paper I drop on your desk. Bring your lawyer, go through this, sign it, become an LP in a fund. Now it's like, here is the PDF, sign it electronically. We're like, that's not a significant enough change. That doesn't allow you to invent anything. So we see this very, like, it's almost like you're in the early days of fintech in banking in the asset management industry. That's the equivalent. So again, I feel very positive and optimistic about timing here. And I see that the openness is there to the second part of your question. The people, I mean, you work at an institution like that. So you injected that knowledge and that spirit. So we see that across the board in all these companies, the right hires, and that makes it easier for us as a startup to deal with these large institutions. At the same time, okay, we have to chart our own course and be very focused how we can be great partners. And when the time is right, these partnerships will happen.
We are very close to the end of this interview. We can speak for like 2 hours, I'm pretty sure,
We
and you
can.
can share a lot of content here. But do you right now recruit teams, and would you like to share maybe what you are looking for teammates joining your teams?
Yeah, absolutely. So, well, we well, how we do this is we have our open positions, and then we tend to just go out into the market, look for it actively, and we first hire via our own network. Those are the best hires. People who already work for you, who know what the deal is, what the expectations are, why it is great to work for us. They introduce us to people they think, and also importantly, people they want to work together with and know who are good. They're adding value. So that's our primary approach right now. Um, we're still small enough of a team. We're around 20 people now, where that works very well and scales. But for example, engineering team, blockchain. So we build on Algorand. We didn't get around to that. Is always a topic where we're hiring because we're always looking for good people who know how to write smart contracts, who have that background, back end, front end, you name it. So we're hiring on the engineering front. We're always looking. Then now what we're doing as part of the licensing process I mentioned earlier, looking for people who who cover things in the context of compliance, KYC, AML processes, managing that. And then finally, on the business side, on the investment management side, we want people who have done this in a more corporate, more established environment, who know the processes very well, who know the boring stuff. I really care about the boring stuff, getting it right, who can come in into our company and help the existing team in investment management to have more firepower and to improve our processes. So those are some of the examples of people we are looking for, of new team members coming in, and we take our time. If the right person is just not available right now, or we're passing a lot of people, that's okay. So we're not in a terrible hurry. In fact, one of the company values, and the team was looking at me saying, "That doesn't sound like you," and they're right, is patience. And we have a little turtle signifying that patience. You have to be patient with things, and I'm absolutely thrilled about building this company for another 10 plus years because it's something I really love working on. I do it with people I love working together with. And then so we can take our time with just step by step in a very deliberate way, building a company, building a team. And I feel like that's an approach I really like.
So is any piece of advice you would like to share with everyone listening to this podcast?
Piece of advice. Well, let's focus on. I had the privilege of teaching the FinTech MBA course at Hong Kong University, and so it's part of, in my way, try to give back because I was lucky to be inspired by people in my university career. But it also makes me think about the next generation. So if I focus that on the next generation, it's don't be afraid, take more risks. When you're young, especially here in Hong Kong, this may be scary to take more risks, to try new things, but when you're young, you're supposed to, and you can recover. You have time and the energy and the setup that allows you to recover. I don't see enough risk taking in young people, honestly. And I feel it's really important for the world. And I feel it's also more rewarding as a young person to have a diversity of experiences, try things and fail, live to see the next day, have the scar tissue to prove it, tell the story. And yeah, that would be my advice. Take more risks.
Perfect. I like it. Where people can learn more about your company, but also about yourself?
Well, we're at evident.capital. That's our website. We're on LinkedIn under the same, you could find us under the same name. Personally, a good way to connect with me is LinkedIn. And I encourage everybody to connect with me, ask questions, come back with feedback. I'm always happy to help if I can. So yeah, please be free to reach out.
Thank you very much for joining me today. It was a pleasure to have you here. I know you mentioned we didn't speak about Algorand, but maybe we can do another episode to speak
so many topics
about this, and also speak about the future of your company, with which company you are working. It would be a pleasure for me.
Awesome. Medhy, it was so great to catch up, and I look forward to the next time already.
Thank you very much.
Thank you.